that. But this year I'd like to predict four things. I'd like to predict a gold price of $1,900 an ounce. Hello everybody, today's August 19th, 2011. I'm going to have to point the camera forward like usual because I got the sun at my back. There's too much of a glare. I hope that doesn't bother most people, but because I'm heading east, I'm kind of forced to point the camera forward. We're having an exciting day today in silver. Silver was up over $2 an ounce and back to $42.95, almost $43 an ounce. You know, I did some videos saying joking about how the bubble had burst in silver on May 1st when it started tanking from $50 back down to 30, 32, 33 range. And you know, it needed a healthy correction. It had shot straight up, and I was welcoming a nice correction. Plus they put on the COMEX, they raised the margin requirements 5 times. The amount of money you got to put up to hold contracts of silver, so a lot of people were forced to liquidate and cash out. So, you know, there was a lot of selling that just pushed the price right on down. So I've been expecting at some point that we would come back and challenge that $50 again, and it seems like it's coming real soon. I mean, there's a lot of steam building up behind silver, and it looks like it could just push past 50, and who knows where it goes from there, but it just seems like it's coming soon. I mean, the chart looks like it's ready to attack 50 again. I wanted to talk a little bit about backwardation. You know, I'm not an expert at the futures market, but I do read about this stuff, and you know, silver went into backwardation in February, which means that the future price becomes cheaper than a closer contract that's coming up sooner. Generally, there's what's called a contango, where you have the future price of something is more expensive because you have storage fees and whatnot. So generally you have the future price is more expensive than a futures contract, say for next month, wouldn't be as expensive as one for 6 months from now. But in February, silver went into backwardation. Now the last time that happened before this year was 1997, when Warren Buffett bought about 130 million ounces of silver. It went into backwardation. Now gold is today gone into backwardation, and James Turk recently said that will represent a loss of faith in fiat money. I mean, I already lost faith in fiat money a long time ago, but I mean, that is sort of like a signal or a trigger. I mean, I guess gold in backwardation is a huge deal, and people are starting to fear that they're, you know, generally there's shortages involved when you have backwardation, when the, you know, the current spot price is higher than what people are willing to pay in the future. A lot of that's associated with shortages, and maybe there's some shortages forming in the gold market. I don't know, I'm just speculating. I do know that the COMEX is real short on physical silver. Now, the backwardation in silver, from one report that I read, seems to be intensifying. And if you think about the amount of silver that was available in the COMEX warehouse, available for delivery in 2007 was about 140 million ounces. And in that dropped this February of 2011, that dropped down to about 102 million ounces. Well, between February and now, we've dropped from 102 down to 28 million ounces. That's totally incredible. I mean, we've gone in 4 years from 140 million down to 28 million. So who knows how long that 28 million is going to last. You know, one big player could just come wipe that out, you know, right now. So I don't want to start, you know, spreading rumors or anything, and I know that there's already been talk of this before, but there could actually be a default to the COMEX before the end of the year. That's a possibility. Could come next year. I don't know. It's going to come at some point. People watching this channel know silver and gold are headed a lot higher. That's what I believe, and I'm sure that's what you believe. There's so much in silver's favor. I don't want to get into listing them in this video. It's such an exciting thing to be involved in and to be aware of. You know, I was talking to a guy at work, and he's saying that, you know, he was talking to somebody, and they said that they cashed in some gold jewelry, and you know, the lady had a couple ounces, and they probably took 50% off the top on her. But anyway, she said, you know, now I got some real money, when they put the cash in her hand. Yeah, right. You had real money. You had some real gold, and now, you know, you get paper nothings. But most people, you know, they just see paper as money. It's been money for all of my life. That's what I always thought was money. Cold hard cash was, in my mind, it was always paper. Well, there's going to be a lot of people waking up to the fact that paper money's, you know, not worth the paper that it's printed on. And like Gerald Celente says, your paper, your money in the bank, your electronic entries aren't worth the money they're not printed on. They're not worth the paper they're not printed on. So anyhow, I wanted to give a quick update on the 90% silver values of the dimes, quarters, half dollars, and dollars. We have a 1964 and earlier dime worth $3.10, half dollar worth $15.51, a quarter worth $7.75. You could almost buy 2 gallons of gas with a quarter that bought you 1 gallon back in 1964. And a silver dollar, the Morgan and Peace dollars, going for about $33.18, their silver content value. In case I wasn't clear on what backwardation is, the meaning of gold backwardation is that trust in future delivery is scarce versus trust in gold in somebody's hands today. So, you know, they'd rather have it now than wait for it. And normally backwardation is signaling scarcity. I believe I touched on that. Because there's a risk-free profit that someone can generally have by giving something to you now and having a guarantee of it having be delivered back to them in the future at a higher price. But when you have backwardation, you don't have that guarantee any longer.